Hello and welcome to Cleverchesstrading. In this video, you will find a clear way to identify the direction of the market in just 5 minutes using ICT dealing ranges. I will show you, as always using an algorithm, a precise and easy way to determine premium and discount. And finally, you will learn a strategy that is incredibly profitable and only uses one time frame. So let's begin. First, we need to understand how a range is created. What is a range? And finally, what is a dealing range? The origin of a range begins with the famous market maker buys and sell models that ICT teaches. That's how price is fractalized in any time frame. We can define a range by simply saying that is the one created when a market maker buy and sell model unfolds and has successfully completed. Okay, but how market maker models look in candles? They are simply a candle or a group of candles that are opposite to the last direction, or can just be an engulfing candle. Looks like it's probably reversing. Let's see an example here. This is the 15 minutes time frame in the Nasdaq, a random point in price. Here we got a market maker buy model in this candles. And here we got a market maker sell model. We can be secure that inside that candles, we got a market maker buy or sell model in the 1 minute or lower time frames. Let's zoom in. And we have just engineered a new sell side and a new buy side. And this is what we call a range, not a dealing range. So we can have normal ranges, meaning prices has just taken one side of the market or is contracting, making smaller ranges. A dealing range forms like this. Price starts consolidating at a certain time, in this case, around 12:30 p.m. Then it creates a smaller range where buyers and sellers will be interested in taking positions. Then price just takes one side and then goes to the other side, making the famous dealing range. Remember, as ICT teaches, dealing range is when price takes both sides of the market, sell side and buy side. Whichever take first is usually a fake move, and which takes last is more likely to expand in that direction. This is how you can identify a potential direction. Of course, sometimes we'll just chop around, but because we are maybe in a larger time frame consolidation. Here comes an important property of the ranges. They can be big and expansive ranges or small contracting ranges, meaning that if we are, for example, bullish in a big range and suddenly price start a small range inside, it is highly probable that this small range is just a consolidation to generate sell-side liquidity to then continue higher. So it is important to refer to previous dealing range and its size to see if we can trust the actual range. When price uses a small range inside a bigger one is usually that we know as a turtle soup pattern. Finally, as you probably know, ranges and dealing ranges can be divided in half to get the premium and discount. This is how we can enter in a high probability setup. The strategy is pretty simple. Just buy in a discount, sell in a premium using a higher time frame direction of a dealing range. That's it. We take profits when price the other side or when price is reversing, and we let the profits run while it is expanding. For easily identify dealing ranges and all this, I created a free indicator called the Rook Algo to help you in your trading. Just search in TradingView for it or look in the description of this video. So now let's choose a time frame to show you how this works, making some potential trades, so you can see how powerful this Rook is. I named that way because once we have entered in the right spot, it moves straight line up or down to profit. Let's see the Nasdaq back in time 1 month, July 1st. The way you're going to use this indicator is similar to the pawn algo. We need a higher time frame first to then look into the lower time frame. We are using the daily as the higher time frame. Then we will use the 4 hour and 1 hour to enter. We immediately know the dealing range is the white lines. We are in a daily expansion. So we mark the last fair value gap. We see the actual daily range is smaller, so will probably be used for liquidity is not a dealing range yet. Now let's look for 4 hour. We are contracting, as you can see. Price forms a new dealing range, but is smaller. So this means we are about to move. Small ranges creates big ranges. So we just need to wait for price to take one side and we go for the other. We could use this range to enter, but is not high probability we are right at the equilibrium. Because of all this trend up, we can see that we are clearly bullish. The Rook confirms that with the information table to the bottom right. If we see 1 hour price has taken sell side and now apparently is going for the buy side. So we need to wait for next New York session to decide. We are waiting for a new discount. Okay, we go forward. We are entering after the manipulation. We are now in discount below the yellow line. We just wait for the buy signal that is a close above previous candle high. Okay, right there we enter. Stop below this breaker. And we let the trade run. We could take partial at the high of the daily buy side, or you can trail your stop or close when you see a sell signal. Wow, it gave us a very great run because it's a daily level. If you are liking this video, don't forget to subscribe and hit the like button. Okay, here, price stop us on profit, but as you can see, it gives 7 to 1. All we did was understating the logic. Now is obvious that because of the range in the daily, we will be targeting now the sell side. We expect a market maker sell model, so we just wait for a retracement in a premium in the New York time. Here we got an entry, but is around 3 p.m. Let's wait. Over here, we get a turtle soup of this high into a fair value gap in a premium. We enter at the close of the candle and aim for the daily range low. Let's see. If you're interested, I am forming an army of automated profitable trading algos in my Telegram channel. Join for free with the link in the description to see them in action in the live market. It moves straight down to profit. Almost there. And we are done. Well, this trade gives us around 8 to 1 in profit. Okay, this is the end of this video. Hope you found this video insightful. Good luck and good trading. Thanks for watching.